We just reported a few moments ago, Comcast beat analyst estimates. The cable company boosted rates and sold more expensive services, such as high-speed internet. For more, we are joined right now by one of the top-ranked analysts on the company. Matthew Harrigan is with us from Wunderlich Securities. Matthew, thanks so much for joining us this morning. As we just covered here, we did see a beat on both the top and the bottom line. But as you and I have said in the past, not many people pay attention to the actual earnings numbers. Where did you see the most activity as far as consumer ads or subtractions?
Yeah, I think overall these were fairly good numbers. Another cable company at some investor conferences weekly, I think, spooked the street to a certain extent, talking about how the slow economy was affecting customer activity. But I think these Comcast numbers were fairly good. They added about 421,000 revenue-generating units. Ours around 425. I think if you take fall of these numbers, the only disappointment would be that they lost about 275,000 video homes. I was slightly below that, but I think the street number was quite a bit lower than that. So that would be the only mar in
Matthew,
these numbers.
is this just a function of people looking at their cable bills and saying, I don't want to pay more than $100 a month?
I don't really think it's too much over-the-top activity at this point. I mean, even technophiles can't really access all the content you would like to get. I mean, to the extent that there's over-the-top, I think sometimes it's actually low-end activity, rather than smart kids who just came out of MIT and Stanford. So I think the video business is still certainly hampered by satellite competition, certainly by competition from Fios and Uverse. But I think the overall economy for the lower-end consumer at least, and you have to remember this is a pretty ubiquitous product, is still affecting things.
So, sorry, Matthew, I didn't mean to cut you off, but I mean, we know that Comcast still has the most market share of any other cable company in the U.S. We crunched some numbers. 27.8% is what they hold, and our viewers can see this now on a pie chart. It's actually in green there. 27.8%, then DirecTV, then Time Warner Cable. But we're watching a pretty public dispute here in the cable landscape, and I'm wondering if this fight between Cablevision and News Corp has any implications that you see to Comcast's bottom line.
Well, in the immediate bottom line, I mean, clearly not. In the longer term, I think it raises more questions on the NBC Universal, deal. And I think, across the board, content costs, particularly for the broadcasters, are inevitably going to increase. I don't think News Corp is going to get precisely what it wants out of the blocks, but Cablevision, certainly needs that programming. I think Cablevision's a great company with a great franchise, but I do think that the payments to the broadcasters are going to continue to accelerate. If you don't mind my adding, the one other point that was interesting in these numbers is, the broadband, customer gain was about what I expected. But when you really look at the phone company numbers, late last week, you can see that there seems to be a bit of an uptick now in the U.S. broadband, market activity, which is really dead in the water in Q2, particularly for the phone companies.
All right, so you see that as perhaps a reason if you were advising people to maybe cut back on their phone company holdings because cable is gaining grounds.
Well, I think at the end of the day that the Fios offering at least is going to be pretty common, have a lot of commonalities with the higher end cable offering in terms of the capabilities of the product. So I think the most important element is that both sides should maintain price discipline.
Matthew, thanks so much. Joining us from Wunderlich Securities. By the way, Bloomberg LP, the parent company of Bloomberg TV, filing papers against Comcast NBC.